doing and why we were doing it, I hope that makes a lot of sense to anybody looking at it. When you look at the trade itself, you'll see at the very bottom edge, you can see that there's a big red block just here, and you can see that we are leaning right on that big red block, right? We're literally on just one tick above it, and the very nice little upside we got on that trade. You know, $1,200 on a 6-lot, guys, inside of 3, 4, 5 minutes is pretty good, right? And that's you just taking it back to what we think is probably some mid-price fair value. If you look in the background, we can already recognize, you know, part of that structure. It's not the best, but we can already recognize this level in the background. If we draw the same level in terms of the deltas, we can see that that last delta candle is massively out of price, right? So that delta candle right there tells us that the dealers bought some. Well, if the dealers buy some here, should I not be buying some? Well, probably. If I've not got any other reason not to, then I should probably be quite keen to buy up some oil prices. So the price I paid for that oil trade there was perfect, absolutely spot on perfect, wasn't it? So it's not that difficult, Paul, is it? So we can take the trade into value, coming into the numbers, make ourselves $1,000 on a 5-lot, 6-lot, whatever, and then clear the trade before the numbers come out, and who cares what happens next? So that little piece of information, we saw what was going on. We saw the dealers started to get a lot of bulls coming into the markets in here. The price drove up to a mid-price fair value, which is about right. The value line really isn't established. So I'm not bearish and I'm not bullish. So coming into that value itself, we're just about to get the numbers. I don't see a buy or a sell, so I'm quite happy to take a fair value trade on that and see if we make some money, which we did. So no trade for me, guys, no trade. So it spiked higher in line with the dealer's positioning. Spiked higher in line with the dealer's positioning, which is quite good. And again, take a look at these two trades, just these two screenshots. Both have been oil. But take a look at both of these two trades. Look how close we're getting to the lean. That little exercise, see that little exercise? That little exercise of getting close to the lean, and then the takeaway from that, look at where the buy trade is right there against that little block, and look at where the buy trade is here against that little block. Do you see how close we're getting to these leans? Because we're getting close to the leans, we're able to take advantage of ultimately these moves without taking on a huge amount of risk. So when you look at that, that oil trade that we got on the trade there, you can see we're literally ticks away from getting the perfect price, aren't we? We're literally ticks away from getting the perfect price. So let's take a look at what happened. So here's the trade. Here's the trade here. So you can see what we've just gone over $2,000 now on that little trade itself, just over $2,000 on that little tiny little bit of business right there, guys. And again, take a look at how close we're getting to these leans. There's the green, there's the orange dash of the block right there, and there's the buy order. A couple of ticks above it, above the Baltic, right on the Baltic, in fact, and then the nice takeaway to the upside. See how beautiful that is? So we're safe. We're trading it properly. We're trading it accurately. We're trading it the way we should be trading it based upon the classroom. $1,000 on this one, $2,000 on this one, another few $100s on the next one, a few $100s. No wonder we make 50 grand, 100 grand a day in these trades. You know, it's not that difficult on relatively small size to make a lot of cash. You just have to be accurate and pristine, guys.